Hello everyone and welcome to the Oil Weekly with Investing Angles. This is our first ever weekly video about oil and I'd like to make it both educational and entertaining. Not only I will discuss oil, but also bring into picture two stocks that greatly depend on oil, ExxonMobil and BP. We will see whether they can provide another reference point. As usual, our videos cover the Japanese candlesticks, technical analysis, and Elliott waves. We will go through all perspectives today. If you find the content beneficial, don't forget to like and subscribe in the bottom right corner. Let's begin with the daily chart. So this is our daily chart. We had a spinning top candle on Wednesday, and this candle was greatly confirmed on Thursday. On Friday, oil had a chance to strongly confirm the top, but it was saved at the last moment with this green candle. The technical indicators started to turn bearish, but the trend is still bullish. As you can see, for example, RSI moved from the overbought condition, and the same happens to MACD. It starts to decline. But the price is still above the 8 exponential moving average line, and well, the trend's considered bullish. However, the overall odds, are close to neutral. And if there is a strong move down next week, oil is likely to confirm the top. But daily is not the chart that concerns me. The biggest concern right now is the weekly. Let's have a look what we have there. First of all, I would like to point to the spinning top. The weekly produced a spinning top, and it looks like the spinning top is the most popular, most frequent reversal candle in oil. We can see this one here, this one here, this one, and this one, and this one. So many tops are marked with a spinning top. And we can see that this top is sitting right below the upper Bollinger Band, and there are a couple of technicals that I would like to point. So first of all, this is the diverging RSI. If we compare with year 2019, we can see 4 distinctive tops, and the 4 distinctive tops have been formed in 2021. Well, they are almost identical from the perspective of RSI movements, and this is most likely that oil is reversed here. So what will happen next? So let's try to estimate how far would it go. So the first run in 2019, we measured as a 1 Fibonacci level, and we can see that this was the oil retraced here to 62%. Well, if oil retraces here, well, 62%, and we remember that oil, this rally started at minus 40. So minus 40. And if it retraces to 62%, it could fall up to $8-9. But we have a different reference point. We can see that in 2019, oil stopped around 200 daily moving average. So if it does here, so that probably gonna retrace towards only 23-25% towards 50, 55, $60. And this, even if it does the minimum retrace, it would be 35% of the top. However, if it goes all the way down 62%, well, it would be about 90% of the top of the maximum. Well, that's these numbers quite disturbing, and this is something that we have to keep in mind. Moving to the next chart, I brought here two charts for ExxonMobil and BP. Let's see what we can get from here. First of all, if we look at this chart, we can clearly see that these charts are the diagonals, most likely. We can see the narrowing range, we can see the overlapping waves, and if we try to place waves here, something like this, we can see a diagonal and the overlapping waves 1 and 4. Speaking about BP, it's very close, very close. So we have the upper boundary, we have the lower boundary, and similar wave starting from here, from the lower low. Okay, so this would be wave 1, 2, this would be 3, 4, and 5. So a similar, very similar structure for the diagonal. So what we know about the diagonals, the leading diagonals from Elliott wave theory, all these diagonals tend, whenever it's built, they tend to retrace back to the origin of the diagonals, or almost to the origin. Well, in our case, this would be quite a move, and if we try to measure it, it will be around, well, 50 to 60%, I guess. Well, that's, yeah, 50 to 60%. We can safely say, if this is a diagonal and if it resolves, it will move 50 to 60%. And if we return back to our chart and we try to find where is 50, 60%, oh, right here. So probably there is a possibility that the wave in oil also retraces around 50%, which would bring it towards $39-40. Okay, so this is our estimate based on the other chart. And now let's talk about the final chart. Here is the monthly candle. So month is coming to an end, and we see that in November, oil developed a very strong bearish engulfing candle on the monthly scale. So when these candles developed, well, it's a very strong bearish signal, and we can see right here, right here. So all the candles left to the lower prices. Sometimes they didn't go very low, but sometimes they do. And right now in January, oil is trying to cancel this bearish engulfing. If the monthly candle closes above the November high, that would be cancellation. But if it doesn't, well, the odds will turn very bearish, and we might go down here. And the formation would be something like this in February. Well, the chances are here, and we know that what could happen. So let me summarize it. If oil fails to overcome the bearish engulfing in the remaining January days, it will flip the monthly odds bearish. In this case, most likely the weekly also confirmed the top and oil will fall somewhere between 25 and 50% based on various estimates. This 50% would be measured off the top in the following months. So let's keep our fingers crossed. The next week is of a very critical importance. The stakes are high. You are watching Oil Weekly Educational, and if you like the study, don't forget to subscribe. The charts will be posted in the blog and available to our subscribers. Thank you again for watching and have a profitable week. Goodbye.